You're watching CLSA Research. Hello and welcome to a very special episode of That's Interesting. You're joining us at the CITIC CLSA ASEAN Forum in Bangkok, and with me today is senior economist and CLSA veteran Anthony Nafte, plus Dev Joshi, who recently joined us as our regional head of microstrategy. Welcome, gentlemen.
Thanks, Alex. Good to be here.
What sort of discussions have you been having with clients?
Largely, I think it's more about the ASEAN, its place in the Asian growth story, and the supply chains. There is a lot of interest and excitement about ASEAN becoming, the part of the China plus one story. What do you think, Tony? What sort of discussions have you been having?
Well, the good news for me from a macro point of view is that clients, again, are very interested in the ASEAN economies. There's always something going on in the ASEAN economies, but it's not always investors are that interested. And at this point in time, they're extremely interested.
Well, Tony, speaking of opportunities, you recently wrote a report titled Nickelodeon, and you were talking about the transition to EVs and how that's going to spur manufacturing in the region. Do you know any major players in Southeast Asia?
So Indonesia and Thailand are going to be the major competitors in the EV space in Southeast Asia. They have the manufacturing capabilities, and the Chinese auto manufacturers, their greater interest is those two countries, Indonesia and Thailand.
How important is EV sector for this region?
So this is hugely important for Indonesia. This is going to provide a boost to manufacturing. It's also a spur to the investment cycle through rising FDI.
How does it impact the equity market?
No, actually, I think the FDI story, especially the EV story, is also very important for Indonesian equity market. And it could bring about some structural changes to the equity market. Now, there might not be those many stocks directly, exposed to this story as of now. But the way it's going to change the structure of the Indonesian equity market is, you think from the equity market perspective, Indonesia is one of the high beta equity markets, right, in emerging markets. And the reason for Indonesia being a high beta market doesn't really come from the equity market itself. So if you look at from the market composition, right, the cyclical sectors are probably around 20% of the whole market. Consumer sector is big, telecoms is a big sector in Indonesia, and they are not really high beta sectors. Yes, banks is one of the largest sector in Indonesia, but Indonesian banks have very high ROEs, and they have probably one of the highest capital adequacy ratios in Asia, right? So they are not really that cyclical in terms of, from the balance sheet perspective. And Indonesian balance sheets across ASEAN are one of the strongest ones. And this is probably a lesson learned by the corporates after the 1998 Asian financial crisis, where they figure out, look, we cannot really control the volatility into the economic cycles, but what we can control is our balance sheets. And Indonesian corporates have done that very well. The reason Indonesian equity market is high beta is actually come from the country balance sheet, the balance of payments. In the past, a lot of the growth has been financed by the foreign portfolio flows. So in the past, Indonesian ownership of the bond market was pretty high. The foreign ownership was pretty high, around 40%. It has come down to now 20%. But more importantly, going forward, as this EV story plays out, which means that, the growth will be more financed by the structurally FDI flows rather than the portfolio flows, which means that, it will not be as much dependent on foreign bonds. Because in the past, when there is risk on and risk off, these foreign bond owners, if there is a risk on in the market, they will buy Indonesian bonds, which will impact the currency and the bond yields. And if there is a risk off, they'll sell this, right, which will impact these things, these markets, and which will lead to volatility into the equities, which means it could lead to re-rating potential of the Indonesian market. And also from the style perspective, Indonesia so far has been more sort of a quality and a risk market. What this means is, people usually try to time the market in terms of the risk on and risk off. But now if these structural changes come by, it will become more sort of a growth market.
Excellent discussion. Thank you so much, gentlemen.
Thank you,
Thanks, Alex.
You've been watching CLSA Research.